The reason there was that divergence in the year-end inflation forecast is simply because the government had allowed for some of their policy measures that they knew about, whereas the Reserve Bank follows a protocol of only including the policy changes and policy measures that have already been announced and legislated. So they weren't in a position to include the electricity rebate or the additional rent assistance. At Westpac Economics, we did make an estimate of what we thought the government would do, and while it was a little bit different from what the government actually announced, we think that what they're expecting for inflation is within the ballpark of what we were expecting.
So should we expect that the RBA will now revise its forecast?
They will have to revise their headline inflation forecast, but of course we have to remember that the Reserve Bank is looking forward. They're thinking about their inflation forecasts, and so it's much more relevant for them to think about measures like trimmed mean and measures that take out some of the extreme values of particular prices. And so they will not be as influenced by that change in their headline inflation forecast. They'll be focused on the underlying trend.
Some critics have rounded on the budget, saying it's inflationary. Others say the $22 billion over 10 years for a future made in Australia is nothing more than a rounding error. What's your view?
We have a $2.5 trillion economy, Rachel, so as an order of magnitude, those are not huge numbers. But we do have to remember that at the moment, the Australian economy is close to fully employed, and so any additional demand can have an influence on lifting prices. I think one of the reflections we have over the budget week is that at the point that those support measures start to come into place, including not just the Future Made in Australia, but also the electricity rebates and some of the other support to households, it's not so clear-cut that the economy will be fully employed. We're going to have quite slow growth over 2024, and that should engender a little bit of spare capacity in the economy by the time we get to the end of the year.
I guess we're already seeing some of those signs with data this week, namely wages showing a slowdown there, jobs numbers showing an increase in the unemployment rate. Given the weakness that is emerging, can borrowers be confident that their interest rates won't go up?
One can never be 100% sure of anything, but I do think the probability of a rate rise has declined as the week has gone on. It's certainly not our central case anyway. But let's put the most recent data into perspective. Everyone was expecting that wages growth had peaked, and that's what the WPI data showed this week. And indeed, the April data for the labour force, yes, the unemployment rate did kick up, but there has been employment growth as well. And I think the way I would interpret those numbers is it really just brought us back to where we thought we would be at this point in time when we were looking at our forecasts at the end of last year. The March quarter was a little bit of a head fake. There was a lot of volatility. There's been shifts in the way people operate through the year. So the seasonal variation through the year is shifting, and that's making it hard to interpret the month-to-month numbers. But I think the broad sweep of what we're seeing in the labour market data, in some of the more leading parts of the labour market data like job ads and in wages is this is an economy that has been fully employed, but it is now at the point of turning. The labour market is still tight, but not as tight as it was. And by the time we get to the end of the year, I think the RBA will see its way to being able to withdraw some of the contractionary nature of monetary policy as it currently stands.
Lucy, we'd be in recession if it weren't for migration. I wonder, what do you make of the opposition's budget reply that would see migration numbers cut by 25% for the next 2 years if they win government?
While GDP per capita has been falling and consumption per capita has been falling even more, I don't think it necessarily follows that if we hadn't had this catch-up in population growth over the past 12 months that we would actually be in recession. The labour market is tight, unemployment is low, so we need to keep those things in perspective. We do expect that population growth will decline from here. It is already in the process of declining because so much of the surge in population that happened last year was catch up after our borders reopened, and indeed also after China's international borders reopened, and so many foreign students all came back for first semester last year.
Have migrants been unfairly blamed for our housing crisis? And do you think the government's budget measures adequately address the housing supply issue?
Our housing cost issue is a very complex, multifaceted problem. It is true that the sudden surge and catch-up in migration that we saw last year has pushed up rents and, as a result of that, also housing prices. But that surge in population was a result of the decision to close the borders in the first place. So it would be unfair to say that that was somehow the migrants' fault. It was the decision to close the borders in the first place that resulted in that catch-up. And it's also partly because housing supply has been so disrupted. We just don't seem to be able to build more houses. There's a huge backlog of homes that have already been approved, that have been started but are not being completed. The housing industry's ability to produce has been seriously disrupted, and that's not a simple problem with a simple fix.
Lucy, you've written that both the RBA and the government are walking a fine line, but neither are doing the policy equivalent of running with scissors. What do you mean by that?
Well, essentially, both of them are ensuring that they can provide as much support to the household sector, a household sector that is doing it tough collectively, that's been squeezed by high inflation, by a rising tax take and high interest rates. They're trying not to weaken the economy any more than necessary, but they're also conscious that the more support they provide, the more likely it is that they'll actually end up holding up inflation. So that's the balance that they're both trying to strike, and they're both trying to strike that balance in the knowledge that the other one is also trying to strike that balance.
Lucy Ellis, great to speak with you. Thanks so much for your time.
Thanks very much.